Hello, ladies and gentlemen, crypto deep divers. Welcome back to Wicked Crypto. Today, I'm going to talk about Bitcoin. Also, I'll do some update about gold and silver as well. In case you haven't installed the Brave browser, you can check it out. It blocks out all the advertising and also serve the internet faster, as well as you can earn some basic attention token. If you're interested, you can click the link below. That will help out my channel as well. Before we get into that, make sure you subscribe to my channel so you don't miss out the upcoming airdrop or token swap. Also, you can follow me on Twitter as well. So you can see yesterday, the 10-day moving average crossed above the 20-day. So that means a signal for the bullish momentum. And this is the method based on Mr. Anderson. So we are back to the bullish momentum. So another reason why is because if you go to the commitment of trade for gold, you can see the short position is 182,000 and this is versus 57,000. This is from the producer merchant. And the swap dealer, the short position is like over 300,000. Long position is 120,000. And in terms of the managed money, the short position is only 22,000 and 249,000 for the long position. So there's a reason why they want to pump the price is because they are not liquid. They don't want to liquidate their own position, right? They want to liquidate somebody else's position because you can see the short position here is 32,000, over 300,000, and this is over 180,000. So this is basically they want to pump the price to liquidate this short position. And in terms of their short position, there's not much in here. You can see only 22. That means they're going to pump the price to liquidate the short position because all the position in the managed money the institution is on this side. It's not on this side. So that's why they want to pump. And same thing as silver. This is the silver, but this report is as of December 3rd. So that probably they already liquidate some of the position already. So not a financial advice. You use your own due diligence. And in terms of short position, you can see the producer, the merchant. You have 61,000 versus 12,000 in the long position. Same thing, the short position is more, 79,000, 53,000. Managed money, you only have 28,000 versus the long position, 73,000. So that means the institution is on this side of the trade. They are long the position. And versus the merchant and the swap dealer, they are on this side of the trade, which is short position. That means that they want to pump the price to liquidate all this position. So this is one of the reason. Another reason is because China, they just released their CPI yesterday. It go from 7.5% from a year earlier, and actually I think 3.8% gain in October. So this is pretty. I mean, this is an official CPI, but the unofficial probably I'm guessing maybe up to 8%. So just like in the US, they have a CPI index, which is pretty misleading. They're saying the inflation is really low, but when you go to the store, you probably see that the price they up probably some of the price up 8% or 10% or something like that. You don't know, depending on what items you buy, basically. And in terms of the the pork price jumped 110% from last year, which is very drastic. And because of the African swine fever, the supply of pork is very tight in China. And because of the inflation and all that, China, Chinese people, they like to buy commodity like gold to maintain their purchasing power to hedge against inflation. And also the onion price, you probably heard about that in India, go over 400% after March. But and India is also another market. They like to buy gold to keep their wealth and all that. They like gold anyway. So there's another reason. But I think the main reason is because of the long and short position. I think this is just trivial. And another thing, because in the news they talk about that because of the interest rate, because Fed maintained the same interest rate, didn't change anything. It pumps up the price of gold or commodity. It doesn't make sense to me. The reason why is because if you decrease interest rate, that means that will benefit the commodity market, right? And because there's more liquidity, that means more easy money and all that. But then they maintain the same interest rate. It's still commodity still going up. It doesn't make sense. But anyway, they give whatever reason. And in terms of Bitcoin, you can see the BTC USD long position has been spiking up like that. So I'm not sure how long it will be like this. Probably they will continue to dump the price until all this position liquidate. We'll see. We'll see. I could be wrong too, but I've been talking about this since probably at least 5 days ago, and this is exactly what happened at the time. I think Bitcoin was at 7,005. Right now it's 7,001. So I don't know how far they're going to dump to liquidate all this position. Once this position liquidate, there's no reason to dump. But right now, I think there's some reason. Not a financial advice. Use your due diligence. I could be. Nobody has a crystal ball. It's up to the whale how they want to manipulate the market. So let's go back to Bitcoin. So this is a pretty interesting chart from the at chart BTC, and this is the historical data of the Bitcoin halving. So of course, we'll start from beginning. January 3rd, 2009, Genesis block established. This is after the financial crisis in 2007 and 2008. You have the genesis of the Bitcoin, and at the time it's 50 Bitcoin, new Bitcoin every 10 minutes. So during this time, from January 2009 to November to 2012, you have like 10.5 million Bitcoin already created. Then you have the first halving, which is on November 28, 2012. At the time, the Bitcoin price is around $12. So let's see, let's go back to look at some historical data in Bitcoin price. So at the time, so the first halving, we talk about that in November 28, 2012, right? And at the time it's $12. So it takes about 1 year, around 1 year to have an all-time high for the Bitcoin. So I think it's November 30th. Let me go to November 30th, 2013. Okay, November 30th, 2013, you can see the Bitcoin price at all-time high, 1,100. So 1,100, around 1,100 is the all-time high on November 30th, which takes about 1 year from the first halving to get to all-time high. It takes 1 year. So we'll go to the next halving right now. So the next halving, which is July 2016, at the time of the price is 657. Don't forget, after the first halving, the Bitcoin has been cut from 50 to 25 new Bitcoin every 10 minutes. So during this time, from November 2012 to July 2016, you have 5.2 million Bitcoin created. And then the second halving, which is July 2016, 657. And then when you go back in history, then you go to the so after the first all-time high, you have the bear market 2014, 2015, and then 2016, and then 2016 you have the first halving in July 2016, right? And then the all-time high, it doesn't go to all-time high until until December. Everybody probably remember this, December 17, 2017. It takes about to reach around 20K, which takes about 1.5 years. 1.5 years from the July 2016 halving to all-time high. It takes about, after the halving, it takes about 1.5 years to get to all-time high. So let's go back here. So from here to all-time high, it takes about 1.5 years, which is around 20K, which is December 17, 2017. So during this period, like July 2016 to 2020 halving, which is May next year, it will have 12. Right now, we still have 12.5 new Bitcoin every 10 minutes. But after halving next year, it will be 6.25 every 10 minutes. So you can see the third halving is coming up on May 14. Let's see, let's go back. So the next halving will be May 14, 2020. So based on the historical data, looks like that so if May 14, 2020 will be the next halving. So based on the historical data, the first halving, it takes 1 year to have all-time high. The second halving, it takes about 1.5 years to get all-time high. And the third halving, maybe it takes 2 years or earlier, or probably 2 years to reach all-time high. which is around June 2022, or it could go earlier. Not a financial advice. Nobody has a crystal ball. So, and after the halving, next year, May 14, 2020, you only have 6.25 new Bitcoin every 10 minutes. So currently we are at this rate, you have 2.6 million Bitcoin until the next halving, and then after the next halving, we only have 1.3 million Bitcoin, and it will be less and less. So what do you think? Let me know what you think about the next price target for Bitcoin, and what's the time frame? Do you think it will take around 2 years to get to the next all-time high, or do you think it will go faster? And this is just based on historical data to get an educated guess, I guess. And anything could happen, or it could go earlier. So if based on the schedule, the next all-time high will be around June 2022, or it could go earlier. Let me know what you think about the next halving. Like, what are your price target, and what date this all-time high will go after the next halving? Please comment below. I would love to hear from you. And this will be very interesting to hear different perspective as well. If you found this video helpful, smash the like button, subscribe to my channel. Also share with your friends. Make sure you subscribe so you don't miss out the upcoming airdrop or token swap. Also, you can follow me on Twitter as well. And make sure you comment below. That will help my ranking in YouTube. And I will continue to provide quality video for you guys. Remember, crypto deep divers, we the people take control of our money. Stay wise, stay safe, peace. I'm not a financial advisor. Investing in cryptocurrency and commodity can have inherent risk. Please use your due diligence.